MACCIA. So CGPI is a confederation of GST professional and industries. So CGPI is a very old body of all the practitioners interested in GST. So it consists of CAs, lawyers, and other professionals who are interested in GST, and we have been organizing these sessions from a very long time, specifically in indirect taxes. MACCIA stands for Maharashtra Chamber of Commerce, Industry and Agriculture. It is the leading chamber in Maharashtra state. It has more than 6,000 direct members. 800 plus associations are associated with the MACCIA, and indirectly 40 lakhs members are associated with the MACCIA across various industries. It is a collective voice of all the industry within the state of Maharashtra. It has a legacy of 100 years, and it is very active in policy advocacy and training of its members. As we can see through this seminar as well, that they have been very active in getting members to various trainings and webinars. So, first of all, I would like to invite Lalit Gandhi ji to give his opening remarks for the session. Over to you, Lalit ji.
Thank you, Mohit ji. CGPI और महाराष्ट्र चेंबर ऑफ कॉमर्स के संयुक्त तत्वाधान में आयोजित आज की जीएसटी सीरीज में विशेष रूप से इंटरेस्ट लेकर इसे पूरे ऑर्गेनाइज करवाने में चेंबर की ओर से लीड लेने वाले हमारे साथी कमेटी चेयरमैन ईशान पाटकर जी और सीजीपीआई के सभी पदाधिकारियों का, आज के सेशन में जुड़े हुए सभी ट्रेड इंडस्ट्री के लीडर्स का मैं महाराष्ट्र चेंबर की ओर से हार्दिक स्वागत करता हूं। जीएसटी 2 एक बहुत बड़ा रिफॉर्म भारत सरकार ने किया है, इसलिए विशेष रूप से मैं प्रधानमंत्री नरेंद्र मोदी और फाइनेंस मिनिस्टर और ओवरऑल गवर्नमेंट ऑफ इंडिया को भी धन्यवाद देना चाहता हूं कि मार्केट में मोमेंटम लाने का एक अच्छा प्रयास इस जीएसटी रिफॉर्म्स के माध्यम से हुआ है। हालांकि इसके कई सारे क्वेश्चंस लोगों के अंदर है, व्यापारियों के अंदर है, इंडस्ट्री के अंदर है, और मुझे विश्वास है सीजीपीआई के माध्यम से हम इन सारे जो भी हमारी क्वेरीज है, क्वेश्चंस है, डाउट्स है, वो क्लियर करने में डेफिनेटली हम सभी स्टेक होल्डर्स के लिए एक सपोर्ट का सिस्टम बनेगा ये सीरीज। इसलिए मैं सीजीपीआई के सभी लोगों को, मोहित जी आपकी पूरी टीम को, ईशान की पूरी टीम को विशेष धन्यवाद देना चाहूंगा कि आपने इंटरेस्ट लेके राइट टाइम ये पूरा ऑर्गेनाइजेशन सक्सेसफुली शुरू किया है और आज का इसका फर्स्ट सेशन हम कंडक्ट कर रहे हैं और मुझे विश्वास है डेफिनेटली इसका एक अच्छा फायदा सभी को मिलेगा। हालांकि 8 साल हो गए जीएसटी में, लेकिन कई सारे कंफ्यूजन्स डे 1 से अब तक चले आ रहे हैं। हाईएस्ट अमेंडमेंट जिसमें किए गए ऐसा कानून भी ये था। पूरी दुनिया को टेक्नोलॉजी देने वाले देश का सर्वर हमेशा प्रॉब्लम करता रहा, ये भी हमने देखा। लेकिन जो भी है देर से आए, अगर दुरुस्त आए हैं तो देर से आए दुरुस्त आए, ऐसा भी हम कह सकते हैं। हालांकि जब जीएसटी को 5 साल पूरे हुए तब भारत सरकार ने विज्ञान भवन में एक बड़ा आयोजन किया था और इंडिया के सिलेक्टेड लोगों को उसमें इनवाइट किया था और उसमें सभी राज्यों के प्रेजेंटेशन वहां सबमिट किए थे। आप में से भी कई लोगों ने देखे होंगे। तो महाराष्ट्र का प्रेजेंटेशन बनाने की जिम्मेदारी महाराष्ट्र चेंबर ऑफ कॉमर्स को दी थी और मुझे बताते हुए खुशी हो रही कि वो सारे प्रेजेंटेशन में महाराष्ट्र का प्रेजेंटेशन नंबर 1 पे रहा। इसलिए फाइनेंस मिनिस्टर ने महाराष्ट्र चेंबर को स्पेशली फेलिसिटेट भी किया था। उसके बाद भी काफी सारे इश्यूज हम रखते रहे सरकार के पास, कई सारे इशू रिजॉल्व होते गए। कई सारे टैक्स स्ट्रक्चर में जो रिवीजन के सजेशन चेंबर ने दिए थे वो भी एकोमोडेट हो गए हैं। तो ब्रॉडली बहुत ज्यादा स्ट्रक्चरिंग हो गया है, जो एक एट द आउटसेट अगर हम कहें तो एक अच्छे वेलकम चेंजेस इसके अंदर किए गए हैं। तो इसके डिटेल में जो भी इश्यूज अभी आ रहे हैं वो भी आपके सभी के गाइडेंस से डेफिनेटली हम एड्रेस कर पाएंगे और भी गवर्नमेंट को हमें कुछ इसमें सजेशन देना है तो हम दोनों ऑर्गेनाइजेशन मिलके डेफिनेटली इसके साथ गवर्नमेंट के साथ एक डायलॉग एस्टेब्लिश करके अगर कोई इश्यू अभी नए भी आ रहे हैं तो उनको रिजॉल्व करने का डेफिनेटली प्रयास करेंगे। फिर एक बार मैं आप सभी का स्वागत करता हूं और मुझे आप सभी से इंटरेक्शन करने का मौका शुरुआत में ही दिया, वेलकम नोट देने का, इसलिए भी मैं दोनों ऑर्गेनाइजर्स को धन्यवाद देता हूं। थैंक यू वेरी मच।
Thank you so much, Lalitji. Next, I would like to invite President of CGPI, Sujata Rangnekar ma'am, for giving her opening remarks. Over to you, ma'am.
Thank you, Mohit, and nice hearing Mr. Lalitji Gandhi. Good evening, everyone. I heard the remarks of Mr. Lalitji Gandhi, President of the Maharashtra Chamber of Commerce, Industry and Agriculture, MEKIA. I've always solicited the participation of industry in the process of representation to the lawmakers, since it is the industry and the businessmen who have to actually face the brunt of the amendments. Their response to the amendments in tax laws really matter. And therefore, I'm glad that MEKIA is taking active interest in this pursuit of knowledge. Thank you very much, Lalitji, and your organization. I welcome everyone for this
Thank you, ma'am.
Oh, thank you. I welcome everyone for this most awaited series of lectures on industry-wise analysis of GST reforms. The lectures of the eminent speakers are spread over a period of week to grasp the finer implications of the mega reforms introduced with effect from 22nd September 2025. Our beloved Prime Minister has termed them as new generation GST reforms, framed as Diwali gift to the citizens of India. These reforms are introduced in order to simplify the tax architecture and restore the confidence in the indirect tax system of India so that it will not be referred as Gabbar Singh tax anymore. The said reforms, as I understand, rest on three pillars, namely structural correction of inverted duty structures and classification disputes, rate rationalization into two broad slabs with limited exceptions, and ease of compliance measures like pre-filled returns, technology-driven refunds, and simplified registration. The businesses and industries have taken a positive note of the changes, boosting their optimism. It is expected to lead to GDP growth, restrict inflation, and raising of stock market sentiments. This is what is expected. The business community is pissed off with the present compliance requirements, overzealous enforcement of law by the GST authorities, forced and protracted litigation arising out of the same, which also has the impact on reducing the credibility of GST law as an enactment. These reforms are expected to bring some respite to them. As a result of these mega reforms, notifications have been issued to bring about desired changes in the rates of goods and services to fit them into two slabs, to amend the act and the rules. It is going to be an in-depth exercise to comprehend the changes and their impact. We are here to learn finer nuances of the present amendments to equip ourselves professionally. I wish all of you a great learning from this series and also congratulate CGPI and MEKIA team behind it to have conceptualized this academic exercise. I especially welcome today's renowned speakers, Advocate Udayanji Chopra.
त्याच्यात तू 2 लाख रुपये म्हणतोय पण यांचं मागच्या वर्षीची 90,000ची जी एंट्री माझ्याकडे मी 1 लाख
Thank you, Sujata ma'am, and thank you, Lalitji, for your opening remarks. I would just like to let everyone know that Udyanji had to reschedule due to some unavoidable emergency. So today we will only have one session of consumer electronics by Saradha Gokulakrishnan ma'am, and session of Udyanji has been rescheduled. The date of that session will be communicated later on. So total, we are going to have 5 sessions in this series, which will include all the major affected industries as well as the procedural reforms which has been taken care, which has been done in the 56th Council meeting. So before now, not taking any more time, I would like to hand over the baton to Padmanathan ji for introducing our speaker and starting the session. Over to you, Padmanathan ji.
Thank you, Mohit ji. So it's a great pleasure today to introduce our distinguished speaker, CA Saradha Hariharan, who is a dynamic speaker as well as a prolific author. She is widely recognized for her works with GST with Saradha, which is very relevant in Instagram, YouTube, LinkedIn, and other social media platforms. She is also a co-founder and designated partner of a renowned firm in Chennai, specializing in indirect tax, from end-to-end GST advisory, litigation strategy, tax optimization, and transaction structuring. Before her practice as independent CA, she was associated with KPMG in audit and assurance, and she has held various leadership roles throughout her career. She has wide experience in various diverse sectors, including marine exports, automobile, power, IT, retail and distribution, HVAC, FMCG, real estate, leather exports, hospitality, and healthcare. She has specialized in GST refunds, FTP benefits, and credit optimization. And I now hand over the session to Sri Saradha ma'am to start the session. Thank you.
Thank you very much, Padmanathan sir, for that kind introduction, and thanks to Mohit ji, Lakshman sir, and Sujata ma'am, and overall CGPI for giving me this opportunity. Because CGPI, I would say it's one of the very important organization when it comes to my professional journey in terms of, because it's a group filled with so many indirect tax experts. So on that note, thank you so much for having me here. Just give me a minute to share my screen. So by the time I'm just, attempting to share the screen, one thing that I thought, I can share for the common benefit of all is that, yes, I heard from, the conveners that today, unfortunately, the other speaker could not join and then it is getting, moved to some other day. But having said that, one thing that I can rest assure for all the participants is that there are certain things which are very fundamental and common when it comes to, whether it is FMCG, automobile, or consumer electronic goods. So not only that, in fact, across all the segments in terms of how you are, expected to change the rates, how is the impact of anti-profiteering, how the MRP changes are supposed to take place, how the passing on of benefits to the consumer should take place, how to read the notification, how to figure out whether your rate of tax, whatever that you are charging, is correct or not. So these are some of the fundamentals, I think, which would be very, very common for be it any industry for that matter. So on those lines, I think, we will ensure that the overall aspects are being covered well and are being taken care. Okay. So with that note, let me move on to sharing my PPT as well here. Sir, is it visible? Whether my PPT is visible in the screen? If somebody can confirm.
It's not visible, ma'am.
Okay. Now, sir, is it still not visible?
Yes, ma'am. Now is visible.
Okay, great. Thank you so much. So as the tone was very rightly set, today we are going to discuss about this GST 2.0, and most of us would have got the basic understanding of it now in terms of what is announced by the Prime Minister, what is announced by the Finance Minister. The day starts from Navratri, and it's a Diwali gift, etc., etc. Let me also touch upon those Diwali gifts as well at the end of this session. So with that note, broadly, we have now understood that this is an outcome of the announcement made by Prime Minister on 15th August, followed by
Sorry to
the
cut in,
56th.
Saradha ma'am. I
Yes,
think
sir.
there is some problem on the screen. On your PPT, some area is grayed out.
Okay.
We are on the top.
Is it better now, sir?
Yes, it is better now.
Yeah, I think that's because the,
Sorry
you
again.
know,
Please continue.
video was made visible there. Okay, fine, great. So, this being the background of this GST 2.0, what exactly it is expected to do is to give the benefits to the common man. And today, as we are discussing particularly about the consumer electronic goods, and as well as what we were expected to cover on the automobile and the FMCG product, it's very important because these are some of the industries where it's directly, impacting the common man usage, right? So, if you see the areas where the rate rationalizations have been made, it is very much focused towards the common man benefits. So as the tone has been already said, please remember a very, very fundamental thing, that we don't have this rate of 12% and 28% anymore. It's very clear. So rest assured, anything where you are going to come across like 12% or 28%, you can be assured to say it's completely wrong, whether it is in your input or in your output, because we have already crossed the rate 22nd September. Okay. So whether it is in your system or whether you find it in any of the bills, wherever it is 12 percentage or 28 percentage, you can be rest assured that something is probably wrong with this particular billing. Okay, with that note, now let's understand how exactly is this impact. What is that sequence in which we are going to discuss this? As I said, first of all, we'll understand what is the sector-wise GST rate impact. Particularly, I will be touching upon only this sector. But I'll just give I'll take 1 or 2 minutes only to give a framework of how it has got impacted in the FMCG as well. The second thing is action points and caution that the business should exactly what is that you need to do. I mean, everybody is aware now, okay, rate changes have happened, this notification has been issued, that has been done. But end of the day, I'm still clueless on what I am supposed to do, and whatever that I have done, whether it is sufficient or not, am I doing it right or not? So this is where businesses or even the tax consultants are also having the same confusion. Is it, am I accurate in giving my advices? Am I complete in ensuring that everything is being taken care? So let's have a very clear understanding on the implementation level actions that businesses are expected to carry out. The third point is where the some of the important points additionally to be considered during this transition phase, and certain other recommendations that is being made by the council. Now, as we discuss about the rate changes, I am sure, most of you who are coming from the industry or the tax professionals will be aware of what is the rate change that has happened. But having said that, for the benefit of all, just to touch upon, these rate changes, I will be just highlighting it for the next, 5-10 minutes, not more than that. So first of all, the key area of focus today, that is the consumer electronics sector. So there are three important products that we are discussing about here. Finally, I think, GST Council has also understood India being a tropical country. Air conditioning is no more a luxury product. It deserves to be fitting into 18% and no more require something as 28%, because it has absolutely become a common man, usage these days. But though it's not falling into 5%, it's not an essential item. But having said that, it is well recognized to be falling under 18%. So the second important area, I mean, the second important product is the dishwashing machines. Of course, in today, at least in Tier 1 cities, it's very clear that, dishwashing machine seems to be very, very important. Actually, just like how washing machine or fridge used to be luxury ones, has become a common need in almost all the middle class houses. These days, even dishwashing machines are also becoming common. The third category is TV. Absolutely, without any doubt, TV is something that is eligible to be fitting into this 18% category and not required to be into the 28% category anymore. So these are broadly what we can call as consumer electronic goods. But having said that, let me also quickly give a brief of what is that FMCG or common man items or the food industry, whatever that we are calling about, because as I said, my area is not to discuss on the automobile sector or FMCG today when it comes to industry specific matters. But having said that, let us ensure that all the common things across all these industries, when it comes to how to, how to set the price revision, how to set the MRP, what exactly am I supposed to do from the legal metrology perspective. These are very, very, very common. What am I expected to do as a manufacturer? What am I expected to do as a distributor? What is the expectation from a wholesaler, retailer? No, all these things are very, very common between both these industries. Okay. So let's understand these fundamentals, right? So as I said, in FMCG and this common man items, one thing that you have to probably understand is some of the essential items have become, zero. This is a welcoming change. This is a very, very major welcoming change, because this parota versus paratha versus Malabar paratha has been a long debated issue. I mean, I would say it's an unwanted issue, completely a petty matter. And finally, I think in all good sense, they have realized that it doesn't even deserve to be taxed in the first place. And there is now becoming, the rates are also being reduced on these lines. Okay, so the important point again, I thought this is settling the dispute once for all, but something that I am recently learning because of some or other call that I've been receiving is that people are still under confusion now that this paratha parota is all exempted. Does it mean if I'm, selling any parota or paratha in my restaurant, I should not be taxing it? Now the answer is not so. Please understand, goods are different from services. Services, when it comes to restaurant, though you are serving a parota or paratha or an Indian roti, whatever it is, all these are very clearly taxable, because here you are not selling these as commodities. Here it is, end of the day, a restaurant service. So there the products are very clearly taxable at 5%, because these are not products. This is a service which is given in the restaurant. Now, very clearly, which means what is exempted is only when it is sold. So the simple understanding is it ready to eat, or is it ready to, ready to cook? Okay, so that can be a very simple way of differentiating. End of the day, is it a pre-packaged commodity? Are you, packing it, and are you selling the parota or paratha or any other Indian bread for that matter, individually as goods? Then it is falling into exemption. But the same thing, if it is served in the restaurant, it is still taxable at 5%. So some of the other commodities, most of these FMCG products have now, food products have now slashed into 5%. I'm not taking you through one by one, because I'm sure we have a separate session for it for the respective speaker. But this is only to give an understanding of these products all about, so that we are not, missing to understand the similarity between these industries. So the point here is, what is the important similarity between your, FMCG commodities as compared to the electronic consumer goods, is that there also, in consumer goods, the rates are getting reduced from 28% to 18% without any ITC loss. Very similarly, in this FMCG commodities also, most of these commodities majorly does not have any impact in the ITC, except for those which are getting into exemption. Exemption anyway, there is no ITC. So that's a very fundamental rule. But having said that, most of these commodities comes or continues to be having the ITC eligibility. Okay, so this is a common underlying factor for all these industries which we are going to discuss today. So on that note, though we have some complications when it comes to how the ITC reversal should be made, how to read section 17.2 versus rule 42.43, what is the applicability of 18.4, in what circumstance we are expected to apply, not apply. So these are some of the technical matters. But having said that, in today's discussion, we will not be dealing too much in detail about this ITC related aspects, unless we have more questions on those lines. Okay, so the focus is more on how to do the price revision, etc. Okay, so this is broadly on the FMCG commodities. And then we also have some of the common man items. This is also falling into the FMCG category, like, whatever is your powder, hair oil, etc., toilet soap. So all these things are also falling into the FMCG commodity, or a common man item commodity. That's how we call it as. Okay, so quickly, basic understanding is that most of these are getting into predominantly 5%. Some of them are also falling into exempted category. Now, obviously, the next area, which of course we are not going to discuss today, but for the benefit of all, just to get an understanding of what is it all about, automobile sector is also having a very similar, position today as compared to why we have clubbed all these things together, is because there is a similarity in automobile sector also. Just like how we have it for consumer electronic goods, it's the rate has reduced from 28% to 18%. In automobile sector also, wherever it is less than 4 meter, that is for smaller cars, the rates are also reduced from 28% to 18%. But having said that, there are predominant of the category which is more than this 4 meter, which is falling into higher rate of 40%. Thus, the justification for 40% is that the compensation cess is no more applicable. That's the justification from the government side. Now, with that note, let's understand again in automobile sector also, though the rate has got reduced from 28% to 18%, here also there is no ITC loss. Okay. Now, the important point, which could be slightly additional or differentiating when it comes to the automobile sector, is that the compensations is what to do with the compensations is that is being accumulated. That is still an issue, but right now we are not going to discuss about it because, as I said, this session, or rather, I want to give, with all due respects to the other speaker who could not make it today, we will keep it part for the next session on this particular sector. Okay, but probably, we can see how to take it up if time permits at the end. Now, some of the other miscellaneous goods again falling into the, common man usage, etc. Now, this is broadly how the rate structure have got changed. Now, let's understand the action points and the caution for businesses when it comes to the rate changes implementation. First and foremost thing, may not be of great relevance today because, the date has already crossed, but still one has to understand that if you have had a huge purchase before 22nd September, then you would be ending up in some inventory accumulation, which is also going to lead to some ITC accumulation. Okay. Now, the FAQ issued by the government, very clearly it is referring to a circular, that circular 135, which says that for this accumulated input tax credit, can I claim refund or not? Let's again understand it into two parts. If your entire business, I'm saying all the products that you're dealing with, if the entire business is now moving to exempted category, which is not the case for consumer electronics, but maybe if you're dealing with some food products, then you're anyway no more eligible for ITC, and whatever ITC that you have already availed also, it should be completely reversed under under section 18.4. Right now, I'm not discussing in detail about that 18.4, but please remember, many people have this doubt, now that it is exempted, what do I do with the accumulated credit? Please understand this very clearly. Your accumulated credit is also gone because now your product is moving to exemption. Now, if your product is moving from 28% to 18% category, just like how we have it for this consumer electronic goods, then whatever goods that that is lying in your stock as of 21st September 2025, on that you would have already availed the credit which has been charged at the rate of 28% by the vendor. Do not worry about that credit. Whatever credit that you have already availed at 28%, that will not undergo any disturbance. That will be intact. Again, I repeat, I'm talking about the scenarios where because of the new rate, if your products are not getting exempted or if your products are not moving into 5% without ITC category. So as long as your ITC benefit is continuing, just because the rate has got reduced, it doesn't mean your previous purchases, whatever that you have made prior to 22nd September, which is lying unsold in the, as of 21st September 2025, on that you are not expected to disturb your ITC accumulation. Point number one, very, very clear. Now, point number two, I will come to it in a while. The question here is, now that I'm going to start selling these commodities at 18%, am I eligible for any refund if at all I'm going to have any accumulation of the credit? The point is very clear. The message is very clear from CBIC that you are not eligible for this refund. Okay. But let me tell you, if somebody wants to take a very aggressive view because your credit accumulation is on a very higher side, then I think you have a very fair chances of litigating on these lines because there are certain, court decisions, high court decisions, which says that the circular 135 is not in line with section 54.3, and hence credit refund should be allowed in these kind of circumstances. So at this point of time, the idea is not to get into those litigation aspects, but I want to make one aware that your doors are not completely shut. It's not that you cannot claim refund of this accumulated credit, but one has to exercise abundant caution, which means, see, understand it's not going to be straightforward. It's very, very clear that the department officers are not going to sanction you the refund unless you are going to knock the doors of either tribunal or the high court. So is it worth the litigation, and should I be waiting for the litigation to get completed, or is it making better sense for me in the business to probably liquidate it over a period of time? This is purely a business call that one has to take only after careful evaluation of your costing data vis-a-vis your inventory accumulation, vis-a-vis your GST credit accumulation. Okay. So it's not a question of just asking for the refund. One should also be careful about putting in thoughts as to which is a better strategy, whether litigation or liquidation, which is a better strategy is something that is a very practical decision that one may have to take from a strategic perspective. Now this is prima facie in terms of your inventory planning. Now, as we talk about this rate changes, that it has moved from 28% to 18%, 12% moved to 5%, etc., etc. Please bear in mind, before even you talk about what is the rate change that has happened, kindly reconfirm whether your HSN classification itself is accurate. Now, as I gave you in the example, please understand even the same paratha, if it is sold in a packed commodity only, it is paratha which is getting the exemption. But the same paratha, if you are going to serve on the plate in the hotel restaurant, then it is a service which will attract 5% category. Now, the same paratha, if it is going to be sold in a restaurant which is coming under a hotel accommodation where the hotel accommodation room rent exceeds 7,500, then this paratha will also be taxed at 18%. So, understand it's the same paratha which may get taxed at 0% or 18% or 5% depending upon when and how it is being supplied. Okay. So please do not get into or jump into a conclusion of what is the tax rate. But before that, you need to be very accurate in understanding what exactly is my HSN code and SAC. Trust me when I say that right now, I think industries, even OEMs are looking at this 2.0 or as not just a reform, but in fact a welcoming move, because most of them would have just started with some rate in 2017 and they would have never had an opportunity to look back whether it is right or not. Somebody has fed some rate at some point of time and the billing continues at that rate. And unfortunately or fortunately, what is happening in these 8 years of GST is that departments are extremely busy with, only coming out with litigations based on numerical differences. The numerical discrepancies 1 versus 3B, 3B versus 2B versus 9, etc., etc. Okay. So the classification disputes are definitely already there in service tax era. It is already there in central excise era. And in GST also it is there predominantly when it comes to the central jurisdictions, but state jurisdictions have had very limited opportunities of exploring in this area. Now the point here is, please remember, after this GST 2.0, department is also opening up for two reasons. Now that they have understood that there is a lot of rate revision which is going on, it is important for them to understand whether the classification itself is right or not. Point number one. Point number two, we are right now in 2025 where your GST returns are all predominantly interlinked and automated, and this number is going to match with that number, etc. And if at all it's not matching, then automatically you are going to receive some or other DRC 01BC, all these alphabetical notices. So on that note, it is quite possible that from this GST 2.0 or from this 2025, the classification disputes may also go up. So please bear in mind, but because as I read this notification, not only for services always has some or other classification disputes, even goods also. We are finding there are certain areas where there is a very high possibility for classification disputes, particularly based on what it is made of. Let's say, is it made of rubber? Is it made of plastic? So to that extent, there are a lot of classification disputes which are awaiting us. So kindly bear in mind that do not jump into the conclusion of knowing what is your tax rates, and most importantly, kindly do not expect to know the accuracy of tax rates just by doing Google search, just by checking something in chat GPT, or just by asking somebody in some random groups. With all due respects to all professionals, please understand nobody can exactly accurately understand the facts or the exact detailing, the technical aspects of the commodity or the circumstances and facts through which it is being delivered. As I gave you very simple example, same paratha, you will ask paratha what is the rate, somebody says 0%, somebody says 5%, somebody says 18%. Am I right? All three of them are right. That is because the facts and circumstances of where and how this paratha is being served is differing. Okay. So please bear in mind, these shortcuts to your classification are not going to help you. Your rate of tax determination has to be accurate, and for that the primary accuracy has to be found in the classification accuracy. Okay. So this is a very fundamental thumb rule. Please remember this before you get into identification of the tax rate. Now, coming to this identification of the tax rate, again, shortcuts. Many people try to say, for this HSN, what is the tax rate? For this HSN, what is the tax rate? See, your press release, thankfully, is not just giving you the product description, it is also giving you the HSN code along with the tax rates. But having said that, please remember the limited usage of the press release. Press release is just a press release, end of the day. That's not your replacement of the official notification. CBIC has already issued official notifications, and those notifications are only valid if one wants to conclude what is the tax rate for a particular commodity. And quite naturally, please bear in mind, you can trace the accuracy, you can trace the GST rate only based on your HSN or SAC, and do not try to directly trace it by your description. Your description will not yield you the tax rates, your description will only yield you the HSN or SAC, and that HSN or SAC will only give you what is the tax rate. Okay. Now, for the benefit all, let me again reiterate, you have a big list of GST rate notifications. To give a fundamental distinction, sir, I got to understand from the conveners that we have mixed participants who are coming from the industry, some accountants and some tax consultants, apart from our some of the tax experts in CGPA also. So maybe some of the things whichever I'm discussing here could be found as basics or fundamentals for some tax professionals who are in indirect tax for all these years. But again, as I say, these things are being re-insisted for the benefit of all, because now that we are looking at GST 2.0, at least at this point of time, it's good to pause, understand, reflect, and then move on. Okay. From the conveners also, I just want to get a confirmation, Mohit sir, are we going at the right place? Is it okay that we are touching upon some of these fundamentals?
Yes, ma'am.
We are okay to touch upon these fundamentals as well, right?
Yes, yes, yes.
Okay, great. Thank you. Thank you, sir. Okay, so please bear in mind, when I say notification, there are two types of notifications. One is CGST notification and CGST rate notification. Very similarly, you have it in SGST and IGST also. And for rate identification, you should always go to the CGST rate notification. Okay. Now again, how do you read the notification, the rates which are prescribed in the notification? Please remember, if it is CGST or SGST, let's say if the commodity is getting taxed at 5%, okay. If you read it in CGST or SGST, it will only prescribe 2.5%, which means what? 2.5 CGST and 2.5 SGST. But if you refer to IGST notification, you will find it as 5%. Okay. So this is how one has to read the rate notification, and please refer to the rate notification and not the regular notification, which means if I say 9/2025 of central tax rate notification, you may probably have a very similar 9/2025 in central tax notification also, but that's not what you need to refer here. You need to refer to central tax rate notification. Okay, the rate notification are meant to prescribe the rate of taxes. Okay, now please bear in mind, this 9 list of notifications which I have produced here are only meant for rate. Okay, apart from this, you also have some notifications which are central tax notification meant for rules amendment, etc. And you also have some compensation cess related notification, and you have also received a corrigendum for this notification. Corrigendum means what? Some kind of changes or some kind of errors that needs to be fixed. Okay, so if at all this notification which has been released, it has some errors or some mistakes are being found, clerical errors, those are attempted to be fixed through this corrigendum. Okay, so one has to read these two together, whatever is the notification along with the corrigendum to that notification, that will only give you the clarity. Now this is fundamentally about reading the notification. Now coming to what exactly should I do with this notification? This is as I said, the 9 list of notification only for central tax rate notification. But out of these two, as we are discussing today, specific to this, these three industries, it could predominantly be fitting into two important notification, which is 9/2025 and 10/2025. Now, what I see as the greatest, or a very bold initiative that the government has come out with at this point of time in this GST 2.0 is that usually what would happen is that first and foremost two notifications, that is 1/2017 and 2/2017 central tax rate notifications, these two were issued for identifying the rate of taxes for goods. 1/2017 for the taxable goods, and 2/2017 for exempted goods. Usually, every time whenever there is a rate change that is going to happen for the goods, these two notifications will undergo some or other amendments. Okay, so which means imagine from 2017, if one has to identify what is the rate of tax for a particular HSN, he is expected to track it from 1/2017 and 2/2017 until this 2025. That's the way in which one has to track to derive accurately on what is the tax rate for a particular HSN. Okay. Now, the best part about this GST 2.0 is that now the entire set of notifications relating to this 1/2017 and 2/2017 are done away with. Now, that has been superseded by these two notifications, 9 and 10/2025. This is actually, I would say, a welcoming move because for businesses as well as for tax consultants, now that there is a major revamp that has undergone, it is good that instead of removing some schedules, some or other amendments, they have come out with these two notifications. So from now onwards, if one wants to know what is the rate of tax for a particular HSN for goods, you can straight away refer to 9/2025 and 10/2025. 9 for taxable goods and 10 for exempted goods. You don't need to go back to the previous notifications. But remember, all that I'm telling you is only for goods and not for services. Unfortunately, of course, in today's discussion, we don't have services, but I'm giving it for the clarity of all. For services, similar to how we have it for goods 1 and 2, in services also we have 11 and 12. 11 for taxable services and 12 for exempted services. And every time the service notification will keep on getting amended for every change that has happened. But personally, what I would think is that services are more complicated compared to this goods notification. Goods, at least if you know HSN, it is slightly straightforward. Okay, in goods, the difficulty is more in identifying what is the HSN than in identifying what is the rate for a particular HSN. But in services, there are multiple difficulty. One is to identify the accurate SAC as well as to derive what is the rate of tax for the SAC. Because the problem with services is that you need to first of all assess, is it forward charge or reverse charge? Is it with ITC, without ITC? Is it 5% without ITC, 18% with ITC? Is it optional or mandatory? Okay, and who has to pay the tax? And apart from this forward charge and reverse charge, you also have this 9.5, which is for the e-commerce operation purpose, which is for a specific category. Now they are also including local transportation in that. So the point here is services are much more complicated. Okay, but having said that, goods are not any less, but it's a very welcoming move that you don't need to go back to any of the prior notification as far as goods are concerned. Please be very happy with this 9 and 10/2025. I wish similar thing would have happened for service also. But maybe, it is even complicated for CBIC as well to do it for services. So that's a reason, probably one reason for why they have not come out with one such. Now, the other aspect when it comes to identifying the rate of tax is apart from these two notifications, 9 and 10/2025, yesterday CBIC has also come up with one ready reckoner for identifying the rate of tax for goods. Okay. So I will also probably share the link of that particular ready reckoner and this notification, etc., all these things at the end of this, document, and I will also share it for the benefit of all the participants here. Okay. So it's a ready reckoner which CBIC themselves have come out with. But remember, that also comes with a very clear disclaimer. This is only for the sake of quick referencing and understanding. In case of any non-alignment between this ready reckoner vis-a-vis the notification, which is this official notification 9 and 10/2025, the notification will only sustain. So it's always ideal that you refer to these two notifications for goods and do not go back to these kind of shortcuts. In fact, CBIC document of this ready reckoner is also a shortcut, and they themselves are saying this is not the reliable document, go back to this official notification. Now that being the case, imagine the plight of any other private references or this chat GPT or Google search or your WhatsApp message. Everything is secondary. Okay, those things could help you to get some idea, and then you should come back to this official notification. Okay, now coming specifically to this 9/2025, okay, which is relating to the taxable goods. Now, how is the structure like? As I said, the percentage, whatever that I have mentioned here, is the central tax rate notification percentage, which means you are supposed to add, multiply it by 2. So when I say schedule 1 is relating to 2.5% goods, then it means it is 5% commodity. If schedule 2 is for 9%, it means it is subject to 18%. So the best part here, if you can see, is that this 12% is completely removed out of the picture. And even that last, schedule 7, which is relating to the 14%, is only for the tobacco, pan masala, etc., where, we are also expecting the changes to come in the upcoming days. Okay. So the point here is, remember, these are the revised schedule. And when you go to the official notification, even though you can trace the particular HSN, against that you will not find the rate, because the rates are given at the heading in the schedule itself. Okay, you will not find the rates to be against these line items. But having said that, you can go back to the ready reckoner. Ready reckoner will have that percentages. Okay, so the slab structure itself has now undergone change. 5%, 18%, 40%. 40%, as we said, it's for aerated beverages and this, luxury cars, etc. 3%, 2.5%, 1.5%, and 28%. Okay, so this is the revised rate structure as of today. So as I said, please be very, very careful in identifying your rate of tax. On these lines, one has to exercise abundant judgment. Now the next one is time of supply. Okay, how do you handle the time of supply in this transition period? Okay, typically what you are expected to do is, the point here is, if at all I made some invoice prior to 22nd, and then I have made the supply after 22nd, money is received at some point of time, invoicing is made at some point of time, supply is made at a different point of time. A simple thumb rule is that if 2 or 3 out of these 3 transactions have happened before, then it's before rate. If 2 or 3 out of these transactions have happened later, then it's the later rate, newer rate. Okay, I'll also have a separate, point to discuss on this time of supply. At that point of time, we'll also deal with it in detail. So the next important aspect that you should have done by now is you're changing it in your ERP system. Okay, you need to give effect to these rate changes in your accounting tool, billing software, your ERP system, whatever it is. And in your ERP system, probably, my suggestion is you can also have one specific system alert or a system blockage, that going forward, if you are going to have any inward or outward at 12% or 28%, straight away it should be blocked. Unless it is subject to some kind of exceptional approval because of this time of supply issues or whatever it is. So please bear in mind, this is one control check which we have been continuously advising to all our clients. Please block it completely so that the system itself is not permitting you to make any mistakes. So if at all there is a mistake, the mistake should be at least between 5% and 18%. Ideally, that should not happen once you have fed in the data appropriately. Okay. So the next one that businesses should carefully revisit at this point of time is that please go back to reviewing your contracts and agreements, whether it is your vendors or with your customers. Okay. So especially in terms of your discounting, I will also discuss about it in detail in the upcoming slides. Okay, how the debit notes or credit notes are being agreed upon, how the marketing schemes are being agreed upon. So these are some of the important aspects that one has to revisit in terms of the agreement. Now, the most important part that I want to highlight here is the passing on of the benefit. Okay, the passing on of the benefit to the end consumer is extremely important. Let me be very, very honest in sharing this story for the benefit of all. Yesterday night, I actually went for a walk around. Okay, I just walked around. I'm pretty sure anybody can experiment this after this session. Okay, after the end of the session, please just go to all your small shops nearby your location. Okay, all your whether it is some kind of retail outlet or a supermarket or pharmacy, you go to any random shop. Okay, and try purchasing some commodity. It's a honestly disappointment for me to see that they are all continuing to bill it at old MRP. So I just checked them and then I asked them this question, why are you billing at old MRP? Why are you not changing the prices? Then the immediate response is that that's because still we are selling the old stock. Old stock is in old MRP. Once we receive the new stock, only new stock will come in the new MRP. Then I said, GST rates are reduced. You are supposed to reduce. Then he said, no. If I am going to sell it at reduced price, then it's a loss for me because I already purchased. I already purchased at old rate. If I'm going to sell it at new rate, it's a loss for me, so I cannot do that. Okay. If I'm going to get new MRP for the upcoming products, new stock, then I will on that it's anyway going to be a price reduction. At this point of time, I cannot do because it's a loss for me. Okay. I also try to educate them as much as possible, but unfortunately, the traders or most likely they seem to be more educated on these lines. Okay, and this is the reality. Okay, any of you have actually experimented this? I'm just eager to know, is it only me or anybody else who has experimented? Just raise your hands or give thumbs up, whatever it is. I'm just eager to know if somebody has done this experiment. Did you try going to your nearby shops, ask them why don't you reduce the price because GST has got reduced, etc., etc.? Okay, I find some of you raising your hands, some reactions. Good, good. Okay, so it's honestly a letdown for me. But with that note, let me now give you a clarity on how this price reduction is supposed to happen. We are all talking about pass on the benefit, etc. Now, what exactly we mean to say when we say pass on the benefit? Okay, let's take a very simple example where there is no loss of ITC. Now, why am I restricting this discussion to without loss of ITC is because I don't want to complicate the situation. Point number one. Point number two, there are some industries where there is loss of industry, which is not relevant for today's sector. So I'm keeping it consciously outside as well. And you can always adjust for the ITC loss if at all that is there. Okay. Now, typically, let's take a very simple supply chain. This is not the way in which the supply chain would work in reality. But let's take a simple example, manufacturer to wholesaler or distributor to retailer to consumer. Okay. Now, this is the chain through which the goods are getting passed on to the end consumer. Now, what is happening here is carefully, understand this table. I have given this table from the context of consumer electronic items, wherein the rates, something like, AC or the TV or dishwasher, the rate has got reduced from 28% to 18%. But trust me, this will be equally applicable even for automobile sector also and FMCG sector also. But probably, in automobile sector also, it's 28 to 18%. But the biggest question is, what do we do for the compensations? Is that we'll keep it apart. And in FMCG, instead of 28 to 18%, probably you can replace it with 12% to 5% or 18% to 5%. Okay. Now remember, I'm talking about a scenario where you do not have the ITC loss, which means your product continues to be eligible for input tax credit. That is the situation which I'm talking about here. Now, let us say the product is a consumer electronic goods wherein it was taxed at 28% and the MRP is already fixed at 38,400. That is the MRP. This is a price which you can easily compare for any of the AC or AC, TV or dishwasher. Okay, so let's say the MRP is 38,400. Typically, retailer will not sell it at MRP, but let's assume retailer is selling at MRP without discount. Okay, so it's a simple example for the sake of it. What is happening is that manufacturer is selling to wholesaler at 20,000 rupees plus GST, and wholesaler or the distributor is selling this commodity to retailer at 24,000 rupees without GST. Again, I'm talking about the selling price without GST. And retailer is selling it to the end consumer at 30,000. So 20,000, 24,000, 30,000. These three are the numbers that we are talking about. Okay. Now on this, GST would have been previously. The first table where I have given it is what was the existing situation until 21st September. Everybody would have taxed it at 28%, and this is the selling price inclusive of GST. That is the selling price plus GST. This is the inclusive price. Okay. Now, what is the net GST outflow from the perspective of this wholesaler and retailer? I'm not even talking about the manufacturer, because manufacturer is a different zone, because you have some input flowing from your raw materials, semi-finished goods, etc. Okay, I'm keeping it as a very simple example as of now. Now, what happens for the wholesaler and retailer is that on their gross profit margin, this is not your straightforward situation. It's a very, based on the gross margin. Typically, in a real business, this is not your net outflow, because you may also be having some or other input and input services on which you are eligible for the input tax credit, because it is in the course of furtherance of business. Unless and otherwise it is being blocked under 17.5. Okay. But I am taking a simple straightforward scenario wherein it is based on, it's as if you are just having this input output. So for the wholesaler who is purchasing at 20,000 and then he is selling at 24,000, he will have a net cash outflow on the differential portion between these two, which is the 4,000. On that 4,000, if you apply 28%, maybe he is spending somewhere around 1,120. Okay. Now you take the next level, that is a retailer, he would be probably paying the net cash outflow of 1,680. This is the pre-existing scenario until 21st September. Now what happens from 22nd September when this particular rate is changing? typically going forward, I'm not talking about the unsold stock, I'm talking about what will happen way forward. What is expected is that now the manufacturer is expected to revise the MRP. If the manufacturer is revising the new MRP, ideally it should come to somewhere around 35,400. Why? Because the 28% is gone and it is now becoming 18%. So 30,000 on that, if you apply 18%, it comes to 35,400. So MRP should have undergone change from 38,400 to 35,400 on the commodities which are now going to be manufactured and now going to be coming into the market. Okay. Now going forward on these new stock, what would happen? Manufacturer will be selling at same price. I'm just maintaining the same price of 20,000, 24,000, 30,000. On that you apply 18% instead of 28%. So the selling price inclusive of GST will be so and so. So the net cash outflow between these two. Previously, it was 28% on the differential gross margin. Now it is becoming 18% on the differential gross margin. I hope this part is fairly clear, right? Now the bigger question is, what happens for the unsold stock? Okay, see, I'm particularly stressing upon this. As I said, this is commonly applicable for all the sector. Okay, wherever there is no ITC loss. If it is ITC loss, you are expected to adjust for the ITC loss because that's now getting added to your cost. Okay, now assuming you don't have any ineligibility of ITC, what should happen for the unsold stock? Now, let me give you a first understanding that from the Ministry of Consumer Affairs, initially what they told on 9th September 2025 dated notification is that you are expected to do re-stickering or relabeling of MRP, which means in your commodity already you would have had what is your MRP at the old MRP will be there. Do not erase it, do not overwrite it. Next to it separately you have what is the new MRP. This is on the unsold stock as of 21st September. But the biggest issue for industry is I can at least do what is at my location. Doing at my location itself is a challenge. Okay. The supply chain would have been so wide. I do not even know where is the nook and corner in this country the products are lying, especially in FMCG products. You never know in which rural location, you never know in which location these goods are lying. It is impossible to do this MRP change or restickering across all the locations, across all the commodities. It's a big change, and that also you are expected to do overnight on 21st September night. So this is all not practically possible. Now, what now the Ministry of Consumer Affairs, they have come up with the revised notification. That notification was issued on 18th September 2025. Now, what they told is that, okay, don't worry, you are not expected to do re-stickering or relabeling of the old MRP. You don't need to affix the new MRP on that commodity. Okay, whatever is your unsold stock, which means what? Very clear, whatever stock that you are going to produce moving forward, on that you are expected to change the MRP. You are supposed to do it at the new pricing. Okay, even on that, what they told is that you can, if it, let's say you're already having piled up your packaging goods, the packing material is already piled up, the wrappers are already piled up, don't worry, you are not expected to discard it even if it is going to contain the old MRP. On that you can do whatever is the stickering that needs to be done, and you can continue to use it, but ensure that the new MRP is being printed on the new commodities. That part is very clear. Now what they have told is that for the existing stock as of 21st September, you don't need to do this relabeling or restickering of the MRP. Point number one. Point number two, you are not expected to give advertisement, which otherwise would have been a requirement under legal metrology if you are changing this, MRP revision. That is also done away with. But carefully understand what they told is you don't need to do the restickering or relabeling, but they never told you don't need to change your prices. Unfortunately, that's how I read the headlines in most of the scenarios. Legal metrology has come up, government has, relaxed the provisions. So now you don't need to change your MRP. Okay, then people understand, then you don't need to change your pricing. Okay, but that's not what they told. They only told you don't need to do the restickering, but they very clearly told that you are expected to change your pricing commensurate to the reduction in the GST rate, and you are expected to pass on the benefit to the end consumer. And for this, you are expected to do two things. Importantly, one is you have to give a circular. If you are a manufacturer, packer, or importer, you are expected to give a circular to all your dealers and retailers, telling them from 22nd September on your existing closing stock also, which I have already billed you at old MRP, at old 12% or 28% rate, that also you please sell it at new price, I mean new GST rate. Keep your selling price intact and sell it at new reduced GST rate. Do not continue to sell it at old rate. This is a specific communication which is expected from the manufacturers, packers, and importers to be given to the retailers, distributors, and wholesalers. Point number one. Point number two, they also mentioned that this intimation should also be given to the legal metrology. Okay, now these two things are not relaxed. Please remember, if you are in any of the supply chain, whether you are a manufacturer, importer, packer, or if you are a distributor, wholesaler, retailer, whomever be it, if you are into any of these activities, if you are a business person, then please remember that you are expected to reduce the prices even on the unsold stock as of 21st September, which you have purchased at the old rate. Now, how do you do it? Okay. Again, in this example, we are discussing without loss of ITC. If you are having loss of ITC, that needs to be added to your cost and that your price will get adjusted accordingly. Okay. I'm not taking it up for today's discussion because, that's for other commodities. Now, for this unsold stock, let's go back to the same example. Your old MRP is 38,400. Keep it intact. You are not expected to change it to 35,400. Okay, no worries. You don't need to do re-stickering or relabeling. You can keep it at 38,400. But remember, the price should be reduced. Now, how do you reduce? See here, from 20,000, 24,000 and 30,000, you will apply this 18%, which means even on the unsold stock, now onwards, if the manufacturer is going to sell it to the wholesaler, he is supposed to charge only 18%, which is 20,000 plus 18%. Now, very similarly, wholesaler also and very similarly, retailer also. See, retailer, old MRP stickering will be 38,400, but he is expected to sell this commodity to the end consumer not at 38,400, rather he is expected to sell it only at 35,400. Now, what is the concern here? People think it's a loss for me. No, it cannot be a loss for you because you purchased at 12 percentage, and on that, or rather in this case, you purchased at 28 percentage, which is, see here, if you can see the net GST outflow, it is in negative. Now, how is it negative? What am I comparing here? For the retailer, now the outflow is 5,400 vis-a-vis his input tax credit is not flowing from this 4,320 because he already purchased his goods in the pre-existing rates, wherein the GST rate which was charged by the wholesaler to this retailer would have been at 28% and that credit is this 6,720. So you would have got it with the credit of 6,720 and you are now going to charge only 5,400 or this difference you have 1,320. The first question is, are you expected to reverse this 1,320 because now you are selling at 18%? The answer is a very clear no. You are not expected to reverse this credit. You can continue to enjoy the benefit of this accumulated credit. And what you are expected to do is the only concern, if at all the only concern that would have been for the, for all these businesses is that this credit is now getting accumulated, which is a cash flow issue for me. Practically, it should get diluted over the next period of 2 to 3 months, depending upon how much inventory you are holding, how much is fast-moving commodity, and what is the inventory holding period, and what was the I mean, it's an overall market study and your inventory planning, which will only give you the result of how, how many more months it will take for you to liquidate this cash flow. Okay, it would only be a temporary cash flow issue. So one has to be very, very careful. If you think you want to apply for refund of this particular credit, please remember in mind, this is a process of making an application, getting it verified, and then it could either get approved or it may get rejected, and then you have to go for an appeal or go to court. All these things will take time. If this time is probably longer than your credit being utilized in your regular course of business, then the advice would be please use it in your regular course of business. But if you foresee that you will not be able to liquidate this credit at all because your inventory pileup is so huge that it will take more than 3 months or so, then one can definitely explore the litigation route, okay, of attempting to get this refund as well. Okay, so this is a very, very conscious decision, as I already told you, but please bear in mind two things. One is, this credit differential is not a loss for you, it's only a temporary cash flow issue. And second thing is, even though you purchased at 28%, you are expected to now sell this TV or this, whether it is the the AC or this dishwasher machine, all these things you are expected to sell it at this new rate of 18%. Now the same logic, exactly same logic will hold good even if it is for FMCG. Just replace this probably with there the commodity rate may not be 30,000, 20,000 to 30,000 range. It could be, let's say, 200 to 300 range. Okay. So it could be somewhere around, or even sometimes you would have purchased that FMCG product at 50 rupees and then you are selling it at 80 rupees from a wholesaler perspective. Then retailer will be purchasing at 80 rupees and then he is selling it in the market for 100 rupees. So let us assume if it's a simple FMCG product, okay, where the MRP is 112 rupees. Now, the point is simple. If you are selling it in a small retail outlet, a local shop, or a local, all these, small shops, or this, what do you call the supermarket, etc. If the MRP is at 112 rupees, then the expectation from them is that you are expected to sell it at 105 rupees. Okay, your MRP can be 112. There is no problem. You are not expected to do the re-stickering, but you are expected to sell it at 105 rupees. Okay, now this is uniformly applicable for all. Now, how is this 105? It's because your 12% of GST is now getting reduced to 5%. Okay, now let me also give you this may not be greatly relevant from from the consumer electronic goods, because most of the consumer electronic goods will fall only into the regular category of business. But in FMCG, there are many people who are registered as composition scheme dealer. Okay. So if you are a composition scheme dealer, then the question arises, how should I do this? Okay. First and foremost thing, please understand, if you are a composition scheme dealer, you can never sell it at MRP. Now, why you cannot sell it at MRP? Okay. The answer is here. MRP meaning what? It is inclusive of GST. Okay, it is inclusive of the GST. Let's say if the commodity is taxable at 12% normally, then the 12% is already loaded in the MRP. But what is happening is that this composition scheme dealer, let's say if he's a trader, probably is paying something only which is at 1%, or let's say he's paying at 6%, whatever it is. I'm not talking because it has different varied percentage. Let's say he's paying 1%. Okay. Now, the computation for composition scheme dealer is altogether different. Composition scheme dealer can never sell it at MRP. Now let's take a simple example where there is a final retailer who is a composition scheme dealer. If the product is taxable at 12% and if the MRP is 112, now how he should have already taxed? First of all, if at all he is already following a method of selling at MRP plus 1% if he is paying, that itself is wrong. Okay, I know there are a lot of shops which are doing this mistake. Okay, now what you are expected to do already is that reduce the 12% because that is a component of GST. Add your loss of ITC, your loss, because you don't have the ITC benefit, you are cutting through the supply chain. So then you add that ITC, which is a loss for you because it's a cost for you. Now that gives you what is the actual price. On that you are expected to sell, and then on that you are expected to pay 1% as GST out of your pocket. Okay, now this is how the computation itself should have been already for the composition scheme dealer. Okay, so please understand, it's not the way in which it is sold in the market. People are not clearly educated on these lines, but one may have to carefully understand this, because you cannot think that just because my neighbor's house current is I mean there is a power cut in my neighbor's house and hence I also have a power cut, then I can be happy. That's not how it works. Your neighbor may or may not get a notice tomorrow, but you may get a notice tomorrow. Please understand, your litigation is only your problem. Your tax demand is only your problem. Your neighbor is not going to help you in that aspect, because it's not a temporary power cut problem. This will have some or other litigation for the next 5 years to go, or even more than that. Okay. So please don't act upon based on what your competitors are doing or what your neighbors are doing, what the other persons are doing, what somebody is advising somewhere. Please don't go by all that. Kindly understand that everyone in this chain is expected to pass on the benefit to the end consumer. Okay. Hope, I think this, though I have taken a bit of time in this example, I believe this would have given some amount of clarity for all the participants here. Okay. So next one, probably we can move on little faster from here on. One is on this, time of supply related aspect. The other, there are sometimes goods which would have been sent on approval basis. Now what happens if the approval comes after 22nd September? If the approval is received after 22nd September, then you apply the new rate. If the approval itself has not come, but then the 6 months period has lapsed, then it's a deemed supply. In which case the deemed supply is dated the prior date, then you are supposed to go back and apply the old rate. Okay. Now, another important word of caution for all the industries, please never agree upon in any of your contract with your vendor or customer as inclusive of GST. Okay, this is a dangerous clause which we always used to say, but now that I think whomever has already done this, it's a learning for you. Okay, because your customer will say everything is already included. Especially this could happen even in government contract. We have seen it because government contract earlier they had a concessional rate of 5%, and then when it got revised to 12%, we have seen several civil disputes where people have to go to the court because government says no, nothing doing. The price is all inclusive. It's inclusive of GST. Now you go back and expect them, no, the rate has got increased from 5% to 12%, and hence you please pay me the additional 7%. They are least bothered about it. Okay. So please bear in mind, you should always agree upon the terms where it is GST at applicable rates. You should never say GST at so and so rate. Okay. So any of your proposal, any of your PO, any of your agreement, contract, etc., never make it inclusive of GST. Always keep GST outside and make it as applicable rates, because you never know what rate is going to get changed from the government side. Okay. And sometimes the other piece of advice also is that, because again, on these lines, on the classification matters also, right now we are handling a lot of tribunal level disputes also. We are waiting for the tribunal, and we are also handling some civil disputes wherein the issue is, you would have agreed at some X percentage. The contract itself will say, 12%. Okay. Then what will happen if the HSN code, as a vendor, I very clearly told, no, it is only 18%. My customer will say, now, if you are giving at 18%, I'll go to some other vendor. It is only 12% because you cannot charge me 12%. This will happen especially in contract related matters, because the other person may not have the input tax credit benefit. Okay. So what will happen? He will say, no, you are expected to charge me only 12%. Please be extremely careful in agreeing between the parties that tomorrow if I am going to have any dispute because of this rate change, then anything additional that you are expected to bear. Okay. Because from GST law perspective, you cannot say the responsibility is on your customer. You are the supplier. If it is a forward charge, you are only expected to determine what is the rate of tax. You cannot wash away your hand saying according to our private agreement between two of us, he is giving me only 12%, and that's the reason why I'm paying only 12%. If you have something additional, go and ask him. The department will not go and ask the consumer or the customer. Department will raise this query only on the supplier if it is a forward charge mechanism. So the point here is, don't take your contracts, agreements, etc. for granted. Please get it properly vetted from your taxation perspective. Most of these disputes are coming out only from a taxation perspective. Okay. So kindly bear this in mind. The next aspect already we have discussed in detail, MRP relabeling. As I said, when I told you don't need to re-sticker or you don't need to relabel the MRP, that's only for the old stock, which was the unsold stock as of 21st, September, not for the newly manufactured stock. For the newly manufactured stock starting from 22nd September, it is supposed to be only in the new MRP. If you are using the old packing material, ensure that you are also stickering the new MRP next to it. Okay. And this is a very, 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 important aspect, because again, people are being misled, because, now the legal metrology says, MRP revision is not required. No, so continue to bill it, make it at the old MRP. That's not how it is. What they told is only for the stock that you are holding as of 21st September, you are not expected to do the re-stickering. But again, remember, this is valid only until 31st March 2026, or until your unsold stock exists, whichever is earlier. So which means what? You cannot continue this practice beyond 31st March 2026. At least you are expected to liquidate everything in the next 6 months, whatever is the old stock. If you are not able to liquidate that old stock, then you are expected to do the MRP relabeling or re-stickering. Fair enough. Okay. So please bear this in mind when it comes to the MRP changes. Okay. The next one is ITC. As I said, ITC loss is not greatly relevant for these three industries that we are discussing, and particularly for the consumer electronic goods. But having said that, let me touch upon, if at all your product is now moving into exemption category, or it is moving into 5% category where there is no ITC going forward, then what are you expected to do is that you are expected to do, going forward, you should reverse the ITC, point number one. And on the unsold stock also, you are expected to reverse the ITC. You should reverse the ITC, because you are going to sell it at, exempted rate. But here is where your calculation may not be the same as what we saw already, because that's a straightforward calculation. 28 becomes 18, but 10 percentage. 12 becomes 5 percentage, 7 percentage is the differential which is expected to be passed on. But here it may not be straightforward because there is a loss of input tax credit that needs to be added to your cost to come to your revised pricing. Now, what is that loss? That could be different from industry to industry and from business model to business model. It's not just uniform across the industry. Okay, I don't want to get into the other industries for that matter, but just to give you an example. For example, if you take in hospitality sector, instead of 12 percentage with ITC, now it has moved to 5 percentage without ITC. But what is the ITC loss here may not be the same for everyone. If somebody is owning the property, then they don't have ITC loss on the property. But if somebody has taken it for rent, then the entire GST on that rent, which is that 18 percentage of the property, that becomes a cost to you additionally. So it's purely based on your business model. Okay, not only based on the industry but also based on the business model. Now, point number one is your unsold stock, or your, at this point of time, whatever that you have, on that you are expected to reverse the credit. The second category is going forward. Let's say if you are dealing with both taxable as well as exempted goods, then what you are expected to do is that reverse the credit for the common credit. Okay, proportionate reversal needs to be done. Whatever is the common credit into exempted turnover divided by total turnover. On this basis, you are expected to reverse the credit on a monthly basis. Here again, we have lot of confusions, gray area. How do you treat it, for this 22nd September? Especially now that going forward is also fine. From September is also fine. But how do you revisit at the end of the financial year, because the law uses different wording. Section 17, rule 42 versus rule 43. Some places it says used for, what is used for, what is intended to be used for. These are, issues that one may have to very, very carefully evaluate before drawing to a conclusion as to how do you do this ITC reversal. This is a big area to be, to be evaluated very clearly independently. Now, the other area that one should also be careful is if your commodities are moving into completely exempt, whatever that you're doing, everything is now moving into exemption. Then you should also do complaints under Section 18.4. Section 18.4 says that in those kind of circumstances, whatever is your, input, raw material, semi-finished goods, finished goods, and your, capital goods for the remaining period. Capital goods usually has a 5 years period. For the whatever is the remaining period, all those you are expected to reverse because it's a big hit for those of them. Okay. Now, apart from that, if you still have any credit balance, that is also expected to be reversed. Okay. So this is a huge complaints provision when it comes to ITC reversal. At this point of time, I'm not touching upon this ITC provision in detail because that's not relevant for the industries that we are discussing. But maybe when the discussions are in other industries like hospitality sector, etc., at that point of time, I think the relevant speaker will be touching upon. If there are any queries on this, we can probably take it up. So the next one that you have to be very, very careful is all these things are happening in September month. Okay, so please be extremely careful in filing your September month return, which you will be doing by 20th October. So, I just want to caution all of you on a very important as well as on a lighter note is that the September month return is falling due on 20th October. 20th October this time is the Diwali day, which is falling on Monday. So 18, 19, Saturday, Sunday, 20th is Monday. Okay. So you can assume what is the Diwali gift which is really being given for all the tax professionals and the accountants, etc. So Diwali gift is not the same for everyone, right? Not everybody. The common man's Diwali gift is different. Business Diwali gift is different. Professional Diwali gift is altogether different. Okay. So don't think the gift is the same for everyone. Okay, every citizen gets a different gift depending upon what they are doing. Okay, so on that note, please bear in mind that all these things have to be meticulously taken care because your Diwali falls on 20th, and if you are someone who is expecting any kind of extension, from all of our experiences, we know only on 20th you will get extension. Okay, 20th extension is of no meaning. And I don't think government may proactively give extension now itself because they also know already, they know that there is a revenue loss. In fact, to compensate that revenue loss only, I believe they have introduced it on 22nd September. Let's say if they are going to introduce this rate change from 1st October, what would happen is September is going to be a flat, no business at all. Economy will get slowed down like anything because everybody will be waiting for the new rate revision. Now, to avoid that circumstance, only this Navaratri first day, 22nd September being the date and all those things, so that the first 21 days, whatever you missed, you can, catch the bus for the last 9 days, at least 9 days of Navratri. Okay. But having said that, please remember this Navaratri season is going to be very hectic when it comes to your Diwali season. Okay, because the due dates are falling on those lines. So for businesses and for tax consultants who are into complaints, the important message here is that you need to have utmost caution on two things. One is when it comes to your rate changes, have you properly applied those rate changes? Second thing, have you passed on the benefits to the end consumer? And third aspect is, have you taken due care when it comes to your existing inventory, the rate changes, etc. And fourth one, ITC reversal. And apart from your regular ITC reversal, if you are having an abnormal shift in your business, then have you done the reversal under 18.4? Because if it is 18.4 reversal, then you are expected to file a separate ITC 03 form. You cannot do it through GSTR 3B. So these are some of the very, very important aspects that you, by now you should be already, prepared with, without which it is, impossible for you to close all these compliances before 20th September, 20th October. Okay. So in some industry, you have the inverted duty structure, as even Madam rightly pointed out, one of the agenda or one of the main objective of this revision is that the correction of inverted duty structure that has been definitely achieved in some industries. Let's say, for example, textile industry, it is definitely being achieved. But having said that, are they completely, working towards removal of inverted duty structure? The answer is no. While it seems to be a removal of IDS for some industries, it has also resulted in IDS for some more industries. Okay, for some industries, newly it is now cropping up something like fertilizer or even the carton boxes, etc. Now only they are falling into the inverted duty structure. But for something like textile industry, already it is being done away with. But I'm sure those will be taken care by the respective topic speakers as well. But please remember one point here commonly is that if you are having ideas going forward, please ensure that your cash flow is also revisited. Your monthly, GST outflow is also revisited, because not every business model will be the same. But even for you to revisit, don't decide based on your September month happening. Your September, October is abnormal. Remember, in every business, including government data, everything is going to be abnormal. You have to wait for these 2 months to settle down. And only from October, from November, you may have some reasonable, clarity in terms of your inflow outflow. Now that's for your cash flow perspective. And if your industry was already into inverted duty structure, then one message here is, please do not worry for the past 2 years. You can even continue to claim the refund for the past 2 years, for which you still have the time limitation. That will not get denied just because now your industry products are getting shifted to the inverted duties. I mean, the correction of inverted duty structure is happening. Okay. So the other, very important aspects that one may have to remember is, wherever there is advances received, please be careful in terms of which rate you need to adopt. That also, we will discuss now. And your, actual date of supply, etc. Those are the things that you need to be careful about. And your system, how it is being configured as well. Now, this time of supply, without taking much time, I'll give you a very simple understanding. These are the three important dates that one should remember: date of invoice, date of supply, date of payment. Okay. If all the three are falling before 22nd September, that's old rate. If all the three events are happening on or after 22nd September, then it's new rate. Absolutely clear. But if something is before and something is after, please remember the simple thumb rule. Out of the three, what is majority? If two events are happening before, then apply the old rate. If two events are happening after, then apply the new rate. Okay, this is a simple way in which I also have some examples here, but I'm not taking through in detail. And the provisions of section 14 also I have extracted here, but you can always go through it, the BAR Act, that's quite available. Now, the next aspect when it comes to this, accounting software or billing tool and ERP system is that a couple of things that you need to bear in mind. Change your ERP system. As I also said, configure some of the, conditions and rules that anything on 12% and 28% should be directly restricted. And then invoice generation is something, again, you need to be careful, especially when it comes to this time of supply issues. It should not be a verbatim, just take the rate based on the date. That's not how it is. You need to also revisit on those lines. E-invoicing, again, you need to be careful on those lines. And the sector specific configuration wherever that is required. In fact, if your product is moving from 5% to nil or 12% to nil, you should not continue to do the tax invoice at revised rate, exempted rate. Then you should not even issue tax invoice going forward. The format itself should change. It's bill of supply and not tax invoice. Okay. So these are some of the things that you should be careful in terms of your configuration in the ERP system. Okay. You have to update your tax masters not only for your outward supply but also for your inward supplies, so that your vendors are not making any mistakes. Even if your vendors are making any mistakes, you know what is the mistake. And especially if you are into manufacturing segment, etc., where you are placing an order, PO is purchase order is also placed. Please be careful in placing at the correct GST rates. That's again a very important aspect to be taken care. Okay. And the downstream process, ITC claims, etc. I'm not taking through all these things. Okay, e-invoicing complaints, I already told you. Be careful about, taking any of the sales return. Okay. If somebody is too smart to say, I'll just take sales return, but I will not actually be returning the goods, and then I will just, bill it the old rate, I will bill it back, and then I'll bill it at new rate. Those are not the, legitimate ways of doing these transactions. Please remember, already we have been witnessing a lot of investigations and inspections coming out with some kind of, data which the government is having, wherein they just categorically say the list of transactions for which the movement has not happened, invoiced but not, e-waybill is also available, e-invoice is also available, but there is no physical movement of vehicle because it has not crossed the toll gate. It has, as per the GPRS data, it has not actually moved. Okay, so don't try to be over smart, because non-compliance is not a way to actually run the business. Any day it's better to be compliant with these kind of tax regulations, and if at all you have some legitimate concerns, that can always be handled through litigations and not in these kind of means of illegal means. Okay, so kindly do not if somebody is advocating these kind of ideas, please do not fall prey for that. Okay. And then the transition period, how do you handle the cutoff date, time, etc.? That's again another area which you should have ideally handled. The last very, 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 very important point for this particular segment, the consumer durable goods, and even for automobile sector and even for FMCG product, is this post-supply discount. Okay. This is a very, very, very important aspect, and in a way, it's good that CBSE is coming out with this circular at this point of time, because they at least set the tone on what they expect out of anything that's going to happen. See, what is going to happen typically here is that now, because of this rate changes, let's say, for example, not only in this, particularly in automobile industry, we also have this earlier judgment in the case of Supreme Court decision Fiat India. So what would happen is that because of this rate reduction, people may probably not showing interest towards some of these car models where it's not probably a premium segment. Okay, but then it is falling into 40% rate because of this, more than 4 meter. Okay, the issue is not about the small cars. Small cars will become more affordable now, and it will become a fast moving model. But luxury cars, nobody bothers. End of the day, already I was paying compensations, then I don't have a problem now. I'm anyway okay to pay 40%. But some of these cat on the wall models may get, may become slow moving. Then quite naturally, there may be some kind of incentivizing scheme from the OEM that will get pushed to the dealer, etc. Very similarly, this could happen even for the consumer electronic goods also, and for FMCG also, some of the old moving model, etc. There may be some kind of financial credit note, all these things could happen. Now, when it comes to credit note is very, very, very important area one has to pay attention to. There are a couple of points which I want to touch upon when it comes to this credit note. Right now, what we are discussing is about the financial credit note, first and foremost thing. So one common or one fundamental question which has always been there for this financial credit note. When I say financial credit note, what does it mean? The supplier is giving a credit note to the recipient without reversing the tax liability from the supplier's perspective. Now the bigger question is, yes, I have not reversed the tax liability. Then it obviously means that the recipient is also not expected to reverse his input tax credit. But then issue, or time and again, department is raising some or other concern saying, your purchase price has now come down and hence you are expected to reverse your ITC proportionately. Okay. Now that's not the way to look at it. The CBSE circular is very good on these lines. It says that since the tax liability has been fully paid in the original supply, the financial credit note is being issued without reversal of tax liability from the supplier side. No need to reverse ITC from the recipient side also. Okay. That part is very clear. The second and third part are very, very important to understand. When it comes to this post-sale discount, is it considered as an inducement of a supply? Okay, now I made a sale and then I'm giving a discount. Now, why am I giving the discount? Is it because I have an inducement? I want to induce the supply. Okay. Now, what the CBSE circular says is that if there is no agreement between the manufacturer and the end consumer, okay, now understand very clearly, this is a post-sale discount given by the manufacturer to the dealer. The discount is not given directly to the end consumer. The discount is given to the dealer, and it is intended to be for benefiting him, or helping him to liquidate his stock. Okay. The point here is there is a post-sale discount which is given from the manufacturer to the dealer. The question arises, or the what the CBSE circular says is very categorically that if there is no agreement between the manufacturer and the end customer, then this will not be called as an inducement. Is actually a very beautifully worded circular. In fact, they also try to say that what is dealer's stock is anyway dealer's stock, then there is no benefit that the manufacturer is going to get because of the dealer stock. Okay. So in on this note, the CBIC has also very clearly worded like such discount aims to push the sales competitively but not to compensate for the separate services. But understand one more thing. If the manufacturer is having an agreement with the end customer via dealer, then the discount becomes inducement and is part of the consideration. Now, this is exactly where we may have a concern. While the CBAC circular is beneficial, it's very important how do you fit in your facts of the case into the respective para. Okay, the CBAC circular gives both ways. It clearly says if you have an agreement, then this is this way. If you don't have an agreement, then it is this way. But imagine agreement can also be an oral agreement. So the department can also say, there is an agreement between the manufacturer and end consumer because there is a warranty, because there is, some kind of, link is always there between the OEM and the consumer. So why can't they make it, say that this is a integral part of the original agreement itself, or let's say there is a, oral agreement between the two. So these things are quite possible, but from the prima facie reading, this circular is definitely a beneficial circular, no doubt about it. Okay, but how the department is going to apply this circular, because my facts of the case is always to say that it's falling into the beneficial category, but department's view is that no, your facts are not falling into the beneficial category, so this can be still a possibility of dispute. The third para in this circular is again very, very important. If the dealer is undertaking any kind of promotional activity, okay, let's say I have a particular model, a model of, let's say, one model of AC, or one model of, dishwasher, or one model of car, whatever it is, it can be relevant for all of these, segment which is flowing through the distribution segment. If there is one category of model wherein the dealer is now getting into some kind of promotional activity. The question here is, let's say, I'm a dealer of, Hyundai cars, and I'm getting into some kind of promotional activity for moving, for making some of the slow moving models to push the sales. Okay. Now, this is exactly, you may also have to refer to some of the past decisions. So the way in which department is looking at it is that this model it belongs to the OEM. Okay. So indirectly, you are giving promotion for the particular model. Okay, now this is a promotional activity wherein you are giving this promotional activity as a service to the OEM. Okay, now this may also hold good for any of these consumer durable goods as well. Okay, now this is where the circular is again beneficial in saying that please understand the dealer is having this stock in his hand, and he is engaged in general promotion for his own benefit, because now the stock is my own and it is for my own benefit to move the stock which is in my hand, because I already purchased it from the manufacturer and I have also paid for it. It's not that I'm doing a benefit for him, I'm doing a benefit for pushing my own sales. Okay. So there is no GST because there is no separate activity or a proportional activity which is flowing from the dealer to the OEM. But the CBAC also gives the next category which says that if there is a specific agreement defining the promotional activities between the parties, whether it is advertising, co-branding, exhibition, support, etc., then it will be considered as a separate supply. As I already said, please bear in mind, you need to be very, very clear in terms of how you frame the contract. See, because all these kind of trading activity, what would happen is any of these segments where there is this distribution segment, what would typically happen is there is a annual turnover discount. There is some kind of scheme which will be flowing. There will be something like the foreign travel scheme that is also being given. Volume based discount will be given. So all of these things, especially now that because of this rate change, Somewhere the OEM may also be incentivizing to the dealers or the distributors on these lines. Okay, and very 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 carefully remember, but because these things are going to maybe flowing more now relating to the past period also, because for the credit note you have the time limitation now. Okay, 30th November becomes the due date before which you are expected to complete all your credit notes relating to the past financial year. Okay, now one important update also which I thought will be relevant here is in the credit note you also have this interlink between section 34 versus section 15, because if somebody is going to issue a credit note under GST with tax liability reversal, the recipient is expected to reverse the ITC as well. Now that is very clearly established through the provisions where there is a proposed amendment also which is there. But point here is that is also being enforced through IMS. IMS also is clearly designed in the portal to say that if there is a credit note, normally for regular invoices, what is happening is you have the option of either accepting or rejecting. Correct? You, I mean, apart from accepting and rejecting, you also have the third option, which is keep it on pending. Okay. But for credit note, you are not permitted to keep it pending. You are expected to either accept or reject. But in fact, very recently, yesterday, there was a GST and advisory that has come up newly, where it gives you 1 month time. Okay, 1 month time during which you can keep it pending and then you can decide what you want to do, whether accept or reject. You are not expected to do it in the first month. You can at least, you should be doing it in the second month. Okay, this is a welcoming change, but then this is all the more relevant because starting from now, you have only 2 returns for you to decide. If it is relating to past year, it's all the more relevant because you have only 2 chances to act, either September month return or October month return. With that, you should close your transactions relating to previous financial year. Beyond that, you cannot disclose or declare anything. So kindly bear in mind that credit notes and debit notes are no more simple. The idea behind is very simple. The government wants to, they are not interested to encourage you for issuing any credit notes anymore. Okay, the idea is to completely eradicate this credit note system, credit notes from the system itself. Okay, so please have abundant caution whenever you are issuing credit note, accepting credit note with GST, without GST, it is no more straightforward. Unless it's of petty amount, then it's a different story. But if it's of significant amount between this OEM dealers and retailers, etc., please be extremely careful in taking proper tax opinion before you act upon it. Okay. The next thing that could still be relevant for these industries is if you are doing export, if you are engaging yourself in export of any of these sectors, please bear in mind that your cash flow will change. Okay, couple of things. If now your products are moving into exemption instead of let's say 5%, it's moving
Sadha
to
ma'am,
exemption. Yes, sir.
sorry to cut in, just requesting you to please wrap up in next
Yes,
4 or 5 minutes because we also have
perfect.
some queries by the participants.
Yes, sir. This is the last slide. With that, anyway, we are closing.
Okay.
Okay.
Thank you, ma'am.
So the exporters, 4 important points or 3, 4 important points here is that if your product is moving into exemption, then you cannot continue that with payment of duty, which you have been doing all these while. Automatic refund is no more relevant. You have to go for LUT, that without payment of tax is the only route through which you have to claim the accumulated credit refund. And if your product is reducing from 12% to 5% or 28% to 18%, then remember your with payment refund may not be the same. It will also fall down. So you need to plan your cash flow accordingly, and maybe in some circumstances, instead of going for this model, you need to explore the model of going for export without payment of duty and claiming the accumulated credit through LUT model. Okay, because your rates have now come down. And wherever your rates have gone up also, you should be careful, because if you are, let's say, you are paying taxes on all your products, if your inverted duty structure is now getting corrected, then if you attempt to pay tax on all the products, then you have to pay out of your pocket through cash. That you should not be doing. So probably you have to revisit on your model as well in those lines. Okay. So on the whole, the bottom line is simple. Don't think this GST 2.0, though yes, it is targeted towards the domestic supply, targeted to make things easy in India, it is incidentally having an impact even in export as well. Okay, and one more important point here is one of the main reason for this GST 2.0 reform is because of the US issues. We all know what is happening in the US. The export business is also getting affected because of this new tariff rates, etc. So quite naturally, when the global market is getting affected, the Indian government wanted to make these products more affordable in India, so that at least the Indian supply, the Indian demand is also getting enhanced. The primary objective is to make it more as a, the consumer driven market. The idea is to make it more of a consumption driven market. Okay. In fact, that's the main move towards even the new income tax slab rates, wherein they said, no, we will not give you deduction because of your savings, etc. Because I don't want you to save, just spend, so that the economy goes. Okay. So same is the idea when it comes to these tax rate, revisions also, because the idea is to spend more so that the economy also grows. Okay. So with that note, I think, we have come to the end of this particular session. Okay. So any questions, I'll be able to, take it up now, sir.
Thank you so much,
Should I
Sadha ma'am.
directly?
So,
Yeah.
I would like to invite Padmanathan ji to take up the questions.
Thank you, Mohit Bhai. I'll just, ma'am, I'll read the questions that we have received in
Sure.
the chat box. When should we reverse the credit on exempted goods lying in stock on 21st September 2025?
Okay, see, I think I have explained it already, but let me revisit that. See, first of all, I don't think this should be taken up in today's discussion, mainly because, the commodities that we are discussing today is not subject to ITC reversal. But having said that, since the question has come up, let me make it very clear. Please understand there are two type of reversal that one should be looking at. Okay. Point number one is, where it's for your ongoing business. Anyway, for the future, you cannot take the input tax credit because your product is now going to be exempted. You are not eligible for the input tax credit. And if you are dealing with, taxable as well as exempted goods, then a proportionate common credit reversal is also expected to be done under Rule 42-43. Okay, Section 17(2) operation comes into the picture. Okay, there is no doubt on it. But these are all your regular, ITC reversal. And apart from that, whatever is your existing, closing stock, whether it is your input or semi-finished goods, all these things, there also you are supposed to reverse your input tax credit, because on the unsold stock as of 21st September, you have to take what is the, stock. You should do a stock taking, and on that you are supposed to reverse the ITC. Okay. But the important point that you should bear in mind is not just about the ITC reversal of what you have it today. If all the goods and services that you're dealing with, okay, is now moving into exemption category, then whatever is the stock that you have today, whether it is input or semi-finished goods or finished goods, on that you need to trace and reverse the ITC. Point number one. Point number two, the capital goods which you would have purchased in any time in the last 5 years, on that also you are expected to reverse the ITC for the balance useful life. The law assumes it's only 5 years. Okay, let's say you purchased it 2 years ago. Then for the remaining 3 years period, now you have to reverse the ITC. Okay. The third one, apart from after doing these two things, if you are still left with any credit balance in your electronic credit ledger, that also you should write off. But this is all these are operations of Section 18(4). But remember, Section 18(4) comes into operation. Of course, there are varied views. My view is very clear. Only if all your goods and services are getting into exemption, because it should be read qua registered person and not qua goods or services. But I'm sure, some tax professionals have different views on it. Okay, my view is very clear on these lines.
Yes, ma'am. Shall I read the next question, ma'am?
Yes, please.
Whether compact is covered in face powder?
Okay, see, one thing I would suggest to all the participants is that just now, as I told you, please don't get this advice for, knowing what is the HSN code or what is the rate of tax for a particular commodity. Okay, it may not be, possible for any tax professional to answer you across the table, because the HSN identification itself is a major task, and then you have to move to tax rate identification. Okay, so this is not, as a matter of request, I would put it this way. Kindly do not have any questions on what is the rate for this commodity, what is the HSN for this commodity. It's impossible for anyone for that matter to answer, and even if you get an answer, you would never know whether it is right or not.
Probably then I would have to skip most of few of the questions, ma'am. I'll just read it for you don't need to answer it.
Yeah,
Whether
I don't want to keep it, I don't want to mislead the audience
yeah,
on
I
that.
understand, ma'am. I understand.
In fact, I will tell you, if you read based on the TFM percentage, the toilet soap is different from bathing bar. But because we always think it's soap, that's all. Okay, the rate of tax is also different, to be precise. It's 5% or 18%. So somebody is going to tell me what is the rate of tax for soap. Even if my mom is now going to tell me, ask me, then soap rate has come down. I have to tell, please give me what is the commodity. I have to check what is the TFM percentage, what is the HSN code, and then only I can tell you. See, so is the complication when it comes to the classification.
Yes, ma'am. Second-hand car dealer having receipts payments about 20 lakhs bracket in crores, but the income or margin amount earned is actual earning. The GST registration applicable if margin crosses 20 lakhs. Invoice is not issued, only basic accounting on Excel is done. I think what the queries is trying to ask, should we see the gross value or the margin for the purpose of registration?
Okay, for the purpose of registration, see, you have this notification 8/2018, which is, giving a revised quantum. Okay. But this 8/2018 has also undergone a change now. Okay. Because of this GST 2.0, some changes have also happened on those lines. Okay. So we have to revisit that. And then based on what exactly, there are a couple of things that we need to factor. Whether you have availed credit in the first place, and then only we have to see whether this 8/2018 itself is applicable or not. When I say availed, it's not only in the GST regime. Even if you have purchased prior to 2017 also, we have to check whether the ITC, the credit, whatever that was existing at that point of time has been availed or not. Those kind of, it's a very fact specific question that unless we actually go through it, I don't think we'll be able to, be precise on it.
Fine, ma'am. When a GST rate has moved from 18 to 5% without ITC reversal on stock should not be mandated to be reversed. Since 18.4 speaks about only when the goods or service become wholly exempt, and to add it to explanation 4 to 11 of 2017 states that only 17 to it should be considered as exempt. Can you discuss on this?
Yes, I'm completely aligned on this view. I'm of the same view that, see, because 18.4 is very clear, it uses, some of the three important wordings that is used in 18.4. One is, it says, where a registered person, it does not say where the goods or services, point number one. So, which means the entire 18.4, from my perspective, it should be read only from the registered perspective, a registered person's perspective. So which means you will not be applying 18.4 unless you have all of your goods and services which you will be dealing with falls into exemption category. Point number one. And the second thing is, if you read 18.4 somewhere places, the position of a composition scheme dealer at par with this. So the characteristics of these two things is that end of the day, you are not going to pay taxes. That's what is the key important quality here. You're not collecting and paying the taxes. Okay. Now, as you rightly said, the next wording that is used is that wholly exempted. Wholly exempted is not defined in the law. Just like how in Rule 28 you have this full input tax credit which is never being defined. The wholly exempt is also not defined. Now, if I have to infer what is the meaning of wholly exempt, probably you can look at it in two ways. One is it should be completely exempted, meaning, as you rightly pointed out, it should not be subject to that 5% without ITC. Okay. The second thing is wholly exempted, meaning for the registered person, all the goods and services should be wholly exempted. Okay. So if you read it from these lines, then it's very clear. I don't think one will fall into the bucket of 18. I mean, the 18.4 itself will not get attracted if it is a situation of 5% without GST. Point number one. If it is a situation where this 5% without GST is only a seasonal requirement, just like how it is in hospitality sector, where it may even go up to 18% in peak seasons, etc. And if you are dealing with multiple goods and services where some certain things are exempted and certain things are not exempted, and the fourth category, let's say all of your business goods and services are exempted, but then you also have, let's say, some commercial rental on which you are still paying taxes at 18%. So let's understand these. I mean, it should be completely falling into the exemption bucket where you don't have a necessity to pay tax anymore. Only in that situation, I believe 18.4 would be applicable, but it's purely a personal view. It may also take you to litigation, okay? But some professionals may be aligned, some professionals may not be aligned. But I would suggest wherever you have this concern of 18.4, please do ensure that you take a proper opinion before you proceed.
Okay. Compensation says reversal on motor vehicle, whether the balance lying in credit ledger is to be reversed or to be computed on stock as on 21/9/2025 as per 18.4. Can refund be claimed of the balance of cess balance basis education cess judgment in pre-GST regime?
Okay. So I think, see, compensations is point is something that we cannot skip if we are talking about automobile industry. But I just want to understand the consensus of the convener. Should I take it up because the particular speaker is not there? I can still handle it if because it has come up as a query.
Maybe Mohitji, you can take a call on whether this should be taken up.
Probably I can
We
share my
can
view, and
we
we
can take it
can
up,
again have
Mohit.
this. Sorry.
Yes, Shada ma'am, please.
Yeah, okay. See, I'll give you my view, but probably you can again go back to the view of the respective speaker for this topic. See, compensations is right now it's a burning issue in India. The problem is what happens for the accumulated compensations is which is lying in hand. So 18.4 should it be operational? Point number one. My view again is that 18.4 will not be operational because the wordings used in compensations is again, as we say, is it interlinked with what is the wording that is used in 18.4? Okay, of course, yes, we know that mutatis mutandis, whatever is in CGST law, that's applicable. But having said that, compensation says act as a separate definition of what is, definition provisions are very clearly given there. Okay, those definition provisions may not be completely aligned with what is in CGST law. So a complete reading of these things, I'm not getting into too much on the technicalities. My independent view is that if you read the Compensation Cess Act and the CGST Act, drawing reference to the definitions under both these act along with what is in section 18.4, my personal view is that compensation cess will not attract 18.4. And another thing, can you call it as exemption? Because see, the act itself is no more applicable, then can you call it as an exempted, tax? It's not the case, right? So these are some of the ways to say that 18.4 is not applicable. The next thing, obviously, the question arises, is it refundable? Okay, the government wants to, I don't think government is just keeping quiet, but probably they want to consciously remain silent. Okay, so first of all, my suggestion to any of the industry is that please do not jump quickly into reversal. Okay, because we have all seen the fate of this amnesty scheme, etc., wherein the smarter are those who are deferring their decisions on these lines. Okay, so if you are being over proactive, you only get it penalized, then they will come up and say, as far as basis, we want to settle this issue. Now, somebody has reversed it and they have reversed it, because then the government will also say if they have reversed it, it means they have taken it as cost. It means they have already passed on the benefit to the end consumer. And on the other hand, department will also come up and say you should not have taken this compensation cess into the cost. You should not have passed on this burden to the consumer. See, somewhere they have put this industry into, a confusion where either they should say you take it as cost and pass on the cost to the end consumer. Of course, that is also very difficult also because the market is very competitive. Or they have to say we will give you the refund. Okay. So somewhere the industry is now under concern. But my suggestion is don't take any urgent actions as of now. Let's wait and see what the government is also going to come up with. So at this point of time, if you are very aggressive, apply for refund. Okay. If you are very conservative also, you are not expected to reverse it, with urge. You can still wait and see how the industry is reacting, how the associations are taking up, how the government is going to react, etc., etc.
Ma'am, as you rightly said, we can expect some clarifications soon after notifications are there. So probably some clarifications from the government may come on this aspect.
Correct, correct.
Now, last question, ma'am. What rate needs to be charged on debit note in case debit note is raised after 22/9/25 post GST post rate changed from 5 to 18, but related invoice was raised before 22/9/2025, i.e. 5%.
See, this is again, prima facie, I can say it's a new rate, but then you need to be a little careful on those lines. Okay. You have to just revisit what is the purpose of the debit note, whether you have received the money already or not. Is it something that you are just raising it as a supplementary note wherein the supply already happened, the, money is also received, before the cutoff date, all these things are there. But in general, it's always better for the debit note and credit note, you go back and apply the rate which was there in the original supply. But it's purely facts driven, but predominantly it will fall into the original rate because it's only a supplementary invoice.
Right, ma'am. So that's all questions, ma'am. So I hand over to Mohit ji for taking up the vote of thanks.
Thank you, Padmanathan ji. So I would like to hand over to Prateek ji for giving the vote of thanks.
Hello, good evening, everyone. It is my proud privilege to propose the vote of thanks on behalf of CGPI and Maharashtra Chamber of Commerce for today's enlightening session on GST Amendment 2.0 and its impact on consumer electronics. At the outset, I extend our heartfelt gratitude to our esteemed speaker, Saradha Gokulakrishnan ji, for taking time from her busy schedule to share such in-depth insights for us. Your clear explanation of the recent GST amendments, the practical challenges, and the specific implications for the consumer electronics sector have truly broadened our understanding. The way you highlighted both compliance aspects and industry opportunities was extremely valuable. We are grateful to you for simplifying a complex subject and connecting it with real world examples. Sure, the knowledge shared today will help us not only in staying updated with GST amendments, but also in applying them effectively in our respective fields. I would also like to thank our management organizations for providing us this platform to interact and learn, and all participants for their active involvement, which made this session more interactive and meaningful. Once again, on behalf of everyone present here, I express our sincere thanks to our distinguished speaker for enriching us with your expertise. Thank you.
Thank you so much, sir. I think a personal note of thanks to CGPA as always, in terms of encouraging me for taking these sessions in CGPA forum. And in fact, I just thought I'll also share this PPT with the participants, and along with it, I'll also share one link where internally we have created a Google Drive where we have placed all the documents in a single drive with the proper indexation table, etc. All the official notifications, nothing, no private documents, etc. Only the official government notifications. We have just placed it in a particular folder with the access table index also. So I'll probably share that link also along with this PPT. I think that would be of major help, because given the kind of list of documents that every day you come up with something or the other, I think, this is something that we made it for ourselves because we are not able to track honestly. But then I thought, why don't we make it for the benefit of all? Because even we attempted to do PDF also. But then you circulate one PDF today and tomorrow something else comes up. Okay, then that's of no use. So that's why we thought no more PDF. We'll go for Google Drive and we will probably share the access for all. I'll give that link as well with this. Yeah. Thank you so much, sir. Thanks a lot to CGPA for always encouraging me.
Radha ma'am, thank you, Prateek ji. And to all our participants, our next session is tomorrow at 5 p.m. So that will basically be on agriculture, healthcare, banking, financial service, and insurance. So hope to see you all tomorrow, and hope to do these kind of joint session with the Maki in the future. Just like Sujata ma'am said, that when industry gets involved in the discussion on law, I think that gives the best kind of inputs which are required to draft a litigation-free law. So with this, I would like to thank everyone and close the session. Thank you.
Thank you, sir. Thanks to all the participants.